Hello there, I'm Erin Aid. This is Boom Bust, and these are some of the stories that we're tracking for you today. First up, Google's Eric Schmidt says we're going to end up breaking the internet. Those are some scary words from a guy who knows a thing or two about the internet, and we'll explain coming right up. Then Reggie Middleton is on the show today. The Ultracoin inventor sat down with me earlier to discuss government surveillance, banking, and much, much more. And then the investment biker himself, Mr. Jim Rogers, joined me live in studio this afternoon to talk about agriculture, commodities, and the state of the global economy today. You don't want to miss a moment, and it all starts right now. Our lead story today, surveillance and the U.S. economy. At a hearing in Palo Alto, California on Wednesday, Google's Eric Schmidt was joined by Microsoft Executive VP Brad Smith, Facebook General Counsel Colin Stretch, Dropbox General Counsel Ramzi Hamsani, and venture capitalist John Lilly. Now, this group of tech titans gathered to discuss the state of NSA surveillance in the U.S. Revelations about surveillance have tarnished the reputations of many Silicon Valley companies. Some documents have suggested that U.S. tech giants were complicit in handing over huge amounts of customer information to the federal government. This is an accusation that the executives vehemently deny. They say they only responded to legal demands for user data, and they insist that wholesale surveillance was done without their knowledge. Now, according to the Information Technology and Innovation Foundation, U.S. tech companies could lose as much as $35 billion through 2016 because of canceled contracts and opportunities stemming from the NSA scandal. For many tech executives, the issue is more a matter of profits than a legal debate, and they have voiced concerns about customers defecting to other services or foreign companies in order to avoid NSA surveillance here in the U.S. Google chairman Eric Schmidt lobbed the harshest criticism at the NSA surveillance, saying, quote, "The simplest outcome is we're going to end up breaking the internet." Wow. Now, the panelists all agreed that the surveillance has had detrimental effects on the industry, not only in terms of erosion of trust, but also in terms of the potential economic, social, and educational impact that would occur if countries follow through on their threats to keep data local. Schmidt said, "Governments will eventually just say we want to own our internet, and we don't want other people in it. The cost will be huge in terms of shared knowledge, discoveries, and science. It will also be expensive, since the cost of running data centers in every country may be too much for some firms to handle." The internet is a powerful and amazing tool. We all know this. And like any powerful tool, we don't want to see it misused or damaged. So please, U.S. government, handle with care. Now, to get a hold on the tech side of finance and cryptocurrencies, I was joined earlier by Reggie Middleton, CEO of Veritasium and inventor of Ultracoin. I first asked him if he thinks we're at risk of a balkanized internet due to a fear of government surveillance. Here's what he had to say.
Well, I don't think we're at risk of it, because I think it's already a case. The NSA is a super agency in terms of the capabilities of government agencies worldwide. And they have both the motive and the capability to surveil. That's what they do. So, you know, I think the perception, the revelations that the NSA has been spying, giving people historically false sense of safety. Because they act as if it hasn't been done in the past, but it's something that has been recently, recently engaged. And the NSA is a spy agency. That's what they do. They've been spying since inception. As a matter of fact, it's easier to spy when you have a gigantic centralized network with everybody connected. You cut the NSA's work out for it.
Now, banks have been touted as the least vulnerable to government or commercial espionage. Yet JP Morgan recently announced that it had a breach involving some 83 million accounts. So what's going on there?
Well, number one, I have to take issue with the assertion that they're counted as the least vulnerable. I think they're the most vulnerable. Remember what Willie Horton said when they asked why he robbed banks? That's where the money is. So the banks, the major weakness in banks, you have two big weaknesses. Number one, they have a fully centralized system. They have one server or one set of servers, okay, on one particular type of architecture that can be attacked. So bad actors attack, or those who want to do harm to the banks, attack these servers, and they continue to attack until they get into it. And most of the attacks, I'm sure, are not publicized. And they're only publicized when the breach somehow hits the media. If I'm not mistaken, it's been reported through the fringe media that about 11 banks were hacked about the same time that JP Morgan was. It's just that it wasn't publicized. The second major weakness is the way the banks go about their security. They don't. With the new technology, like the Bitcoin technology, that is thus far been hack-proof, it hasn't been hacked despite the fact that, you know, all the intellectual capital of the world in this space have tried. It would behoove the banks and the banks' regulators to adopt this technology. But the banks cannot adopt it with their current business model because their current business model relies on opacity in pricing. And the Bitcoin technology relies on the opposite, translucency in pricing, a big uniform blockchain that everybody can see transaction and prices. With the banks being centralized, you have one target. If you decentralize the bank's operations and spread it out and have the security of, you know, hundreds of thousands of computers working for the bank security versus one security chief with security staff at one bank, you have a safer banking system. But you'd also have a cheaper and more translucent banking system, and that goes to lower profits and essentially lower revenues. What you would need to do is create a new business model to take advantage of this decentralized system, but that is a leap that I think many banks would be loath to take. And I'm actually trying to convince some banks in doing it, but the 2 or 3 banks, or maybe 1 to 3 banks that do adopt it, will probably be the market leaders, and then everybody else is going to go the way of Kodak.
That's really fascinating.
Or AOL.
Reggie, on Tuesday, Warren Buffett said that the U.S. bank business is not as good as in the past. And he said, quote, "What was a very profitable business has turned into a good business if executed well." Is he right?
Well, he's right from his perspective. You know, he has a large amount of capital, so it is a good business. From those with lesser capital, it went from a very profitable business, oligopoly, to an unprofitable business. In my opinion, and mathematically, arithmetically, you know, bank profits are a function of ZIRP. And ZIRP and bank balance sheets go out of whack, and the ability to take relatively free money and gamble with it goes to the wayside. So if he thinks that banks went from extremely profitable to good, imagine if economics and market pressures had any say in interest rates. And then banks go from good to a business that everybody would run from, or have to reconfigure the business model. And the bank's balance sheets are still not totally cleansed. You know, you had trillions of dollars of basically trash. Exactly where does it go? Did you buy a bunch of poison and BS derivatives for your portfolio over the last 3 or 4 years?
Now, a lot of bank profit, you know, it's a very good point that you're making there, and I appreciate it. But I want to ask you, you know, a lot of bank profit comes from fees these days rather than interest income. So is that fee franchise under pressure?
The free franchise is going the way of the record company. The free franchise is under attack from the result of technology progression. I'm going to give a quick example. In the record industry, roughly about $19 billion in 2000. This was a revenue peak for the industry. Enter something called TCP/IP, the Internet Protocol, and MP3s, and that created a set of efficiencies that caused the record industry to decline. The technology didn't, but the business model that surrounded the technology made it very difficult for record companies to charge premium prices. You had Napster, which was then shut down, but then you had Pirate Bay, you had BitTorrent, you had Apple with iTunes. You had a drop from $19 billion down to $2 billion as of last quarter, and it's still dropping. The entrance of a protocol with a business model that could take advantage of it is anathema and death to a cash cow business that can't move quickly. Now you have the banking industry. For the last 30 years, since the introduction of the TCP/IP protocol or the internet, practically every consumer expense has dropped. The price of consumables, commodities, services, etc., they have all dropped except for one, and that's bank prices, bank product prices, and bank service prices. They've actually defied internet gravity and the efficiencies. They've increased over time when everything else has decreased, both on a nominal basis and on a real basis. On top of that, bankers are paid much, much more than the average person. Okay, so it's low-hanging fruit. Enter a new protocol, the Bitcoin protocol that I mentioned earlier, where you have transactions that occur for pennies, where banks charge, multiples of that, and you have efficiencies, you have safer transactions, hack-proof transactions, EX, JP Morgan, and then what do you think happens? The ability to charge for fees start to dwindle, they go to zero, and then they will soon go negative. They will come to a point where banks will do certain transactions for free or pay you to do transactions and attempt to upsell you on other products. And that's my prediction. The prediction is already starting to come true. If you look at PayPal, look at some of the Bitcoin processors, American Express, Visa, and MasterCard will follow suit soon as they see the cash cows start to dwindle when transaction costs go down to zero and competition jumps in. So long story short, which may be too late, yes, the transaction fees, the asset management fees are going down. Look at the CalPERS pulling out of the hedge funds. Basically, the ability to charge for plain vanilla transactions or simple transactions are quickly dwindling. So in order to make money, you now have to have much more value-added transactions. As of right now, many banks haven't invented this business model. They didn't have to because they were sitting on fat fees, basically.
That was Reggie Middleton, CEO of Veritasium and inventor of UltraCoin. Time now for a very quick break, but stick around because when we return, Jim Rogers will be on the show. The famed investor sat down with me earlier today to talk about everything from agriculture to commodities to the state of the global economy today. We're covering it all. Then in today's Big Deal, Edward Harris and I are discussing bull markets turning bearish. We'll cover all of that. And remember, you can see all segments featured in today's show on YouTube at youtube.com/boom-bust-RT and on Hulu at hulu.com/boom-bust. Now we have to go to break, but before we do, here is a look at some of your closing numbers of the bell. Come on back with us.
What are your thoughts on what's been going on in Washington?
Well, it's a mess, Larry. I mean, the whole country is being scoffed at and laughed at.
Enough is enough.
The media, the candidates, the corporatocracy, covering issues that actually affect you and me doesn't do too much for ad revenue.
Biotech agriculture giant takes on a 76-year-old American farmer based in Indiana.
How much fallout do you think this is going to create for the CIA?
Do you think this is what's triggering the crisis?
America's the largest economy in the world. It's also the largest debtor nation in the history of the world.
Breaking the set is mostly about alternatives to the status quo, but one that gave real alternatives a voice.
One minute they were working toward the American dream, the next they were just trying to survive the night. It's time for Americans and lawmakers in Washington to wake up and start talking about the real causes of poverty in America.
You know that guy who wishes someone would spy on him? How about the woman who enjoys being lied to by her government? This citizen can't get enough congressional inaction, and this taxpayer wants the mainstream media to be more corporatized. While this person would rather eat genetically modified food, this one thinks our prisons are not crowded enough. And what do these people have in common? They don't exist.
welcome back to the show. Up now is my interview with famed investor and author, Mr. Jim Rogers. Now, in this segment, I first asked Jim if he thinks the U.S. has overplayed its hand, as a lot of folks are moving away from the U.S. dollar. Here's what he had to say.
We're shooting ourselves in the foot. We're shooting ourselves in the arm. I mean, we keep doing these things, and so the rest of the world says, well, what are we going to do now? And so they drive themselves together. Mm-hmm. We're driving the Russians to the Chinese and vice versa. We're driving the Iranians into the arms of the Russians and the Chinese. All these people are saying, well, what are we going to do? We don't have any choice.
Right.
So they're trying to find, and they are finding ways to get around the U.S. dollar, the U.S. banking system, and the U.S. It's not good for us. This is not good. No, no, no.
I'm glad that you bring that up because it leads very well to my next question. Now, last time that you were here and you spoke with us, not here, but we spoke, was back in June. And at that time, you were very bullish on Russia and arguably, you know, Russian assets. They've cheapened with the ruble's decline. So do you see this as an opportunity?
Well, that's a very good question. I should watch RTTV to find out. How do I know?
There you go.
You know, you're the Russians, or the Russian-oriented people. I did buy Russian shares back in March. I was optimistic in June. I have been optimistic. They've gone back down. Mm-hmm. And as we speak, I'm sitting here thinking about whether I should step in and start buying. You know, they're not down as low as they were when the Crimean situation happened.
Right.
They may be about to break down, but I'm sitting here. If I weren't sitting here with you, Aaron, I'd be trying to figure out what to do about Russian shares and Russian currency.
Interesting. Now,
by the way, just one reason that the ruble is down, all currencies are down. The U.S. dollar has been going up like a rocket for a variety of reasons, and therefore all currencies are down, not just the ruble.
This is very true. Now, I know that you're very bullish on agriculture and that I should definitely leave my job here as a journalist and go get on the tractor, which we love to joke about. But, you know, how do you feel about Russian agriculture?
Well, I'm wildly bullish. You know, I would love. Russian farms are very, very cheap. Mm-hmm. You can buy a farm, you can buy a tractor. Very cheap. Did you ever learn to drive a tractor? You just take pictures on tractors.
It's on my bucket list. It's on my bucket
list. You're just taking photographs.
Just taking photographs. You got to learn to drive the thing if you want to.
Yes, you'll be a good journalist. But you could start covering the farm.
Right.
You know, go out to the farm, sit on your tractor, and talk to farmers and give reports. Russian agriculture has a great future. It's vast lands. Fertile lands,
right.
And they haven't been ruined like many other places have been ruined. No, I'm optimistic about Russian agriculture.
Now, Jim, can you talk to me about China? We know that China's growth is slowing. So is this a good thing or a bad thing right now?
It's good for that China's slowing down. They've had a property bubble. They've had too much inflation. They've had too much overheating. So it's always good when you can slow something like that down. Now, people who are suffering don't think it's good.
Right.
But in the big picture, it's good for all of us.
On the subject of China, what do you think about Alibaba? What's your take on that?
Well, if you bought it on the opening, you made a lot. I mean, on the offering, you made a lot of money. Otherwise, you've lost a lot of money. So I did not buy it. I'm not, you know, important enough to get shares on the offering, so I didn't buy it. It may be a sign of the top of the technology market. It looks like it has been. The technology market in the U.S., anyway, has been suffering since.
I'm glad that you bring that up because we actually talk about that a lot, and I agree with you on that, that we're at the top or at least very, very close to it.
Gosh, I must be right then.
You must be right. You know a thing or two.
Wow.
Thank you for sharing your knowledge with us. But, you know, let's talk about trophy assets. The Chinese, they're buying up a lot of trophy assets, and it just came out last week. They bought the Waldorf Astoria, and, you know, it kind of reminds me of Japan when they went out and they bought Pebble Beach and these other trophy assets. That was back in the 90s that Japan did that with the golf course. But could these vanity buys be contrary to indicators?
Oh, they very well could be, and that's a good insight on your part. I had the same thought when I saw it. I mean, staggering. Right. Staggering what they paid for the Waldorf Astoria.
$2 billion close to it or something like that.
$1.9 billion. I mean, it's unbelievable. They'll never make any money out of it. Something went to his head. It was some guy who did it, and it may be the downfall of that kid and that insurance company. I cannot see how anybody can rationalize what he did.
Now, speaking of bad indicators on this subject, you know, the market breadth, it's waning, and we know that. But, you know, people like Albert Edwards, I want to read you this quote. He said in a tongue-in-cheek type way, "Sell everything and run for your lives." I love that. It sounds like something you might say.
He may well be right. It looks like he is right.
Right.
The breadth has been terrible. Most stocks are down. Most U.S. stocks are down in 2014. They're not up, whatever the averages are doing. It has not been a good year for most investors in nearly any asset unless you happen to own bonds or the U.S. dollar.
So would you say not only is the bear market coming, the bear market is, it's obviously not upon us, but in the next...
Aaron, I'm not smart enough to know things like that. I'm
This is
telling
what we
you,
look to you for.
watch your show. Watch your show. I know the bear market will come.
Right.
You know, the people in Washington and New York will tell you there'll never be another bear market again. When you hear that, you run for the hills. You run for your life. You know, you call your mother as fast as you can. It's like, what do I do? No, you get out as fast as you can because there's going to be a bear market. The next bear market, Aaron, is going to be much worse than the last one because the debt has gone through the roof. Debt worldwide, including the U.S., is skyrocketed, and we're all going to have to pay a terrible price for all this money printing and all this debt.
Yes. Now, like you mentioned, you know, stocks, they've dropped 15 to 20%. And, you know, this, the Fed would be back to QE in a heartbeat if this were the case, you know, if they drop 20 to 15%, 15 to 20%. But what about the real economy here? That's what I kind of want to focus on and ask you about. Signs of weakness outside the U.S. could come back here, which we know. So are you concerned at all about that?
Well, first of all, what is going to happen is the market will go down, at which point everybody's going to call the Federal Reserve, and they're going to panic. They're just bureaucrats and academics. They don't know anything. They'll panic. They'll say, okay, we're sorry, we're sorry. They'll either start QE4 or they'll print more money. They'll say, don't worry, we'll print even more money, and they'll try to save the market. The market will have a big rally, and that might even turn into a bubble at that point. The real economy, listen, the people who are getting the money, Aaron, are having a wonderful time.
Right.
And their friends who are getting all this money that's being printed. But the rest of the country and the rest of the world is not having such a good time these days.
Absolutely not. And, you know, Jim, with commodity prices falling, it's kind of this sign of global economic weakness. So what do you think about oil's recent fall? What would that say to you?
Well, it says to me what it says to you, that, you know, for some reason there's not as much demand. Something is weak somewhere. It also says that a lot of people probably in the Middle East are dumping oil now as fast as they can because they know they may not, especially those guys, whatever they call it, ISIS, you know, they're probably dumping all they can because if they get cut off, then they don't have any money anymore. Right. So there's a bit of panic selling, it seems to me, going on, and the demand is not as hot. Europe is slowed, China is slowed, everybody's slowed.
Yeah.
Except maybe some parts of the U.S.
That's interesting. So where do you see the greatest opportunity in the commodity space right now?
Well, agriculture, still farm prices, rice. Buy yourself some rice, buy yourself some sugar. I got some sugar out of your green room.
You put it in your pocket. I love it. You practice what you preach. I love it.
I got myself some of your sugar. It's free, for goodness sakes. I'm not stealing from you. I might steal from you before it's over, but no, right now I've just put some in my pocket. No, some things are still very, very cheap worldwide. But most things should probably be avoided. If I were buying shares, I would buy in Russia or China or Japan, not in the U.S.
Interesting. Japan as well.
But Japan is down 60%, 65% from its all-time high. I know your parents taught you to buy low and sell high. If you call your mother if she didn't teach you that. Tell her, Mom, I need some more lessons.
The always, always wonderful author and investor, Jim Rogers. Time now for today's Big Deal. Big Deal time with Edward Harrison, and today we are discussing the bull market, or the end of it. So last year markets were up a massive 30%, and this year they're barely treading water. What gives, Ed? What's the story?
Well, definitely we have consolidation here. I think that at a minimum, when you have a huge run-up that's 30% like that, then you have to ask yourself how much is it supported by the real economy? And while we have good jobs numbers coming in here and there, really when you look at the overall pace of the economy, it's only up probably 1.5 to 2% over the course of the entire year.
Right.
And so profit margins are already at a record high. So the question is, how much higher can they go given that kind of growth? And the answer is not that much higher. So I think that we're seeing at least consolidation, if not the beginning of something more.
Now, Barry Ritholtz, who's a friend of the show, wrote on Bloomberg that there are signs of, you know, this bull market turning bear. So what are those signs?
Well, yeah, I think we might even have a chart up here about that. Let's see if we can pull that up. There's a chart of four different things here.
There we go.
Well, actually, let's take a look at this right here. I think one of the things that you have to look for is, in terms of the S&P, you can see that it's moving up, but that second line there at the bottom is the 200-day moving average. And what you see is that in July, 90% of the stocks in the S&P 500 were above their 200-day moving average. Now it's only 75%, and that's much lower than we've seen in at least the last year. And what that's telling you is that the breadth of the uptick is not as high. Right. Moreover, you look at the Russell 2000, which is all the small cap stocks, and that index is down almost 10% from its intermediate high at the beginning of September, and more than 10% from its high over the last year. So what that's telling you is that the breadth is not there. Here's what we're talking about here. Here are the reasons to be worried about a pullback. Russell 2000 below the 200-day moving average. Nearly half of the NASDAQ stocks are down over 20%, i.e. they're already in a bear market. And in early July, as I said, more than 90% of the S&P 500 was above the 200-day moving average. Now it's less than 75%.
Wow. So, Ed, my big question here is, why would we enter a bear market? Is it some exogenous, thing going on? What's the story?
I think that we would if we continue to tread water here domestically, and then all of the things that are happening abroad in terms of China, Europe, Brazil, et cetera, that slowdown works its way into the U.S. A lot of what we've seen in terms of EPS growth is really just people buying back shares. Right. They're buying back their shares to keep up their earnings per share, but really, when that game is over, then we're going to see that the profitability is not going to be able to allow the stock to rise higher. So. Go ahead.
No, I want to ask you, what do you think the Fed would do if the market fell out of bed?
I think that the Fed, if the market fell out of bed, at a minimum, would push back the rate hikes. And if the market fell out of bed and the real economy also started to fall out of bed, then they'd start with QE again. Wow. So they will definitely pause and push back the rate hikes because of the market. If the real economy starts to throw in very low numbers, inflation starts to dip, then we're going to see QE 5.
Here we go. I mean, it's very, very likely. QE 5. We'll wait and see if that happens. Ed, thank you, as always. That's all for now. But we love hearing from you. So please check out our Facebook page, facebook.com/BoomBustRT. And you can tweet at us, so please do, at Aaronade, at EdwardNH. From all of us here at Boom Bust, thank you so much for watching, and we'll see you next time. Ciao.